Hi friends, Nykaa's IPO back in 2021 gave Alia Bhatt and Katrina Kaif almost 10 times returns. So Katrina Kaif's 2 crores of investment became 22 crores. And if the history was to repeat itself, Shark Tank famed Ghazal Alag's Mamaearth IPO may do something very similar, but not for Katrina Kaif or Alia Bhatt. This time they may do it for Shilpa Shetty Kundra. Because as per Mamaearth's RHP page number 39, Shilpa Shetty Kundra acquired Mamaearth shares at an average price of 37 rupees 24 paise. And if you look at the upper band of Mamaearth's IPO, which is going to be 324 rupees, this is almost 9 times return that Shilpa Shetty Kundra is going to make. And as per their RHP, Shilpa Shetty is going to sell close to 1.6 million shares of Mamaearth in this IPO. And if you do the quick maths at the upper band rate, she is going to make at least 46 crore rupees. My point is very simple. Rich people get richer and poor people get poorer. And by rich here I mean promoters, early investors, celebrities and so on. And by poor people I mean retail investors who do not have enough capital to invest in such companies at the early stage, and what they do is they hope for the IPOs to come out and hope for their money to get doubled and tripled and get trapped in that. Having said that, every IPO is not bad at all. For example, recently I applied for Vishnu Prakash's IPO and I talked about this on my exclusive YouTube member community. You can see that on my screen. And the reasons why I applied for that IPO, I shared that on my YouTube member community. You can consider subscribing to that if you want to go for detailed analysis and want to make informed decisions. But coming back to Mamaearth's IPO, today what I want to do is talk about positives and negatives of Mamaearth IPO, and I'm only going to talk about pure facts that I have derived from their 400 plus pages RHP. I will show the screenshots as well. This video is going to be super interesting. Stay tuned. So Mamaearth's IPO is going to raise close to 1700 crore rupees, and out of the 1700 crore rupees, 335 crore rupees is going to be a fresh issue, while the remaining 1335 crore is going to be offer for sale. As you already may know, any money raised for offer for sale goes directly into promoters, celebrities, investors' pocket directly, and it does not go into company's growth. So if you decide to invest in this IPO, please be aware that 78% of your investment is directly going into offer for sale, which is in the pockets of Ghazal Alag, Shilpa Shetty Kundra, and many other promoters and investors who are selling the shares for offer for sale, who are offering the shares for sale. Only 22% of your money is going to go into company's growth. Now, is it good or bad? You can decide for yourself. In my humble opinion, this is not good at all. You might have a counter argument here that, Rahul, it doesn't really matter where the money is going. What really matters is that, am I getting this IPO at the right valuation? So for that, let me now talk about the valuation. So this IPO makes Mamaearth valued at close to 10,425 crores. Now, is it high valuation or is it low valuation? Let's try to understand that in very simple language. For this, let us head to their RHP's page number 234. So what you see on page 234 is their balance sheet, and what I want you to look at is their total assets. So these figures are in rupees millions, and let us try to convert them into crores. So 1 million is 0.1 crore. So if you look at this figure, you will see their total assets is 1048 crores. So point number one here is that the company is valued at 10,000 crores rupees and their total assets is 1048 crores. So you are paying close to 10 times of their total assets from a valuation perspective. Is it good or bad? Again, you decide. I have shared the numbers with you, but in my view, it is extremely high value because the company has only the assets worth 1000 crores, but they are expecting the company to be valued at 10,000 crores, almost 10 times. The story does not end here. What I really want you to do is have a look at their 3 different asset types. So have a look at goodwill, have a look at other intangible assets, and also right of use assets. So if you look at these 3 assets and total them out, 52 crore is goodwill, 100 crore roughly is other intangible assets, and 57 crores is right of use assets. So if you put this together, this is 200 crores. So 200 crores is 20% of 1000 crores. So 20% of their assets are not hardcore money. And this is an extremely important point. And let us try to analyze this further. What you see here is that they have given detailed notes 4A and 7 for goodwill, 4B for other intangible assets. Let me quickly show you in a very simple language the significance of these assets. So if you go to page number 254, you will see the Goodwill Breakdown here, and you will see that this breakdown is because of the 4 brands that Mamaearth had acquired previously, and you will see the breakup here. So for example, just for kids services is 136 crore rupees of goodwill value. So whenever a company A acquires a company B, then what happens is that company B's goodwill in their balance sheet gets transferred to company A's balance sheet, and this is what precisely we are seeing here. And now comes the most important part. If you go to their page number 259, what you will see is that in Q4 of FY 22-23, the company decided to shut down the operations of Just for Kids services because of various reasons such as non-performance. And what they ended up doing is they had to write off this goodwill, which is 136 crore rupees. There were many other items that were also written down, and I will talk about it shortly when I talk about the profitability of this company. Extremely important. Again, coming back to the point that goodwill is something that if you're shutting down a company, you cannot recover that money. It is a money that you have to write off. The second big component is also the other intangible assets, which is the note number 4B. So again, if you go back to page number 254, note number 4B, what we are going to see is that total other intangible assets is close to 100 crore rupees. But more importantly, if you look at the column here, their brand value that they are carrying in their balance sheet is close to 98 crores. Brand value is extremely important for businesses like beauty and personal care because ultimately it is the brand that sells. But please also be aware that this is not the hardcore money that the company carries with them. It is a notional value. Also, I'm not a brand expert, but if you ask experts about the brand valuations, you are going to get 10 different answers from 10 different people. So from this analysis, 2 key takeaways for you. Number 1, that their total assets is only 1000 crores. The company is valued at 10,000 crores. Point number 2 is that 20% of that 1000 crore is non-tangible, which is brand, which is goodwill, which is right of use assets, which I have not explained to you in detail because the video is going to go longer. My point is very simple. 20% of that money cannot be recovered in case there is a problem in the business. This analysis took me hours of research in going and reading their RHP. Humble request for you to like this video so that more and more people can understand the data and facts and make their investing decisions based on data and facts. And also you can write in comments a simple thank you. It will motivate me to do more research and bring you quality content at zero cost. You can also consider subscribing to my YouTube member community because I post and share my exclusive in-depth analysis on mutual funds, stocks, which will help you to make informed decisions. The second very important evaluation parameter is this company making profit or is this company in loss? Now in the news, you will hear that Mamaearth is a loss-making company and blah, blah, blah. I am going to now help you understand whether it is in profits or loss in the right way. This is a very, very important section of this video. Humble request, do not skip this. So what you see on my screen is, let us go to their page number 235 of RHP and let us see whether the company has been making profits or losses. So have a look at this column here, March 2021, year ended March 2021. And if I come down, their total comprehensive income or loss was close to 1332 crores of loss. Again, these figures are in millions, so you have to multiply by 0.1 to get to the crores. Simple language, I understand crores much better. It is 1332 crores of loss is what the company made. But why this loss? Extremely important for us to understand. So for this, if you come up, you will notice that there is a change in fair valuation of preference shares, which is note number 19. It was worth 1361 crores. So if we remove this exceptional item, then the company was almost breaking even at the end of March 2021. So what is this exceptional item is what we need to understand. So for this, we need to head towards page number 272 of their RHP. And here they have given a clear breakup of this amount here. Let me help you understand in a simple language. So this is about they converting something called as NCCCPS shares. So it is a type of preference shares. They are extremely magical shares. They are different from equity shares. What happens in these shares is, let us say you hold one NCCPS share of a company. So let us say you buy this share at 50,000 rupees per share rate. What you can do is anytime you can go back to company and say that, hey, I bought this share at 50,000 rupees. Give me 50,000 rupees back. And company will have to give you 50,000 rupees for this one particular share. It is not what happens in the cases of equity shares where they are trading at a market rate and it can go up and down. It is nothing like that. NCCCPS shares are a type of preference shares. Please do a simple Google. You will understand a lot about these shares. But the point is simple that company knew that these shares had to be converted into equity shares, and they admitted that as a one-time liability in their P&L account, which was valuing at 1953 crores. Now you might say that here the figure was only 1361 crores and here we are talking about 1953 crores. Why there is a difference? Because they accounted that not only in year 2021, they also accounted that in year 2020. So have a look at this here. So these two numbers are spanned across two different years as well. All in all, company would not have made massive losses what we see in their P&L account because of this liability admittance. It is not a loss that the company has paid out of their pocket. I hope you understand that point. Coming back to page number 235, let us also look at their profit or losses at the end of March 2022. So what we see here is that March 2022, they made a comprehensive profits of close to 14 crores. This is very, very important because many tech startups are not even profitable after 8 or 10 years of operations. Example, Paytm not still profitable. Zomato got profitable only very, very recently. So they made profits of 14 crore rupees in 2022. It's a good point. What about year ended March 2023? Again, have a look at the figures yourself and you will see that they made losses of 150 crores in the year ended March 2023. The reason for that loss is also very, very important for us to understand. Have a look at this item here, which is 154 crores rupees of loss because of impairment loss on goodwill. I explained that briefly, but let me now share the details with you. For this, we need to go to note number 4 and 7, which is on page number 259. And again, you will notice that because of company shutting down the Just for Kids Services subsidiary, they incurred a loss of 154 crores. And you will very clearly see that the goodwill, the trademarks, the software are something that you can't recover. It's only the assets such as the trade receivable, the cash, etc. has some value left in it, and they made a loss of 150 crores. This is a proper loss that the company had to account for. So from that perspective, year ended March 2023, yes, company made a loss of 150 crores. And lastly, if you look at the quarter ended June 2023, the company seemed to have made profits of 24 crore rupees in just one quarter. So the time only will tell us whether the company will continue to make upcoming quarters profitable or not. The key takeaway is that the company had made losses in the past, mainly because of the exceptional items. I will also talk about their operations and their EBITDA margin, etc. in few minutes so that you understand this in bit more details. Let us move to criteria number 3, which is earning per shares. For this, let us go to page number 109 of the RHP, and what you will see is that the earning per share year by year. So 2021, they had an earning per share of minus 98 rupees, 2022, 2023, and so on. Even if I consider the best case scenario in 2023, quarter ended June 2023, their earning per share was 0.83 rupees. And if we look at their upper band, which is 324 price of one stock, and if we divide it by 0.83 earning per share, their PE ratio at 324 rupees comes out to be 390. Now, just to put this PE ratio in the context of the competition, what you see on my screen is the sector PE, and the sector PE for companies such as Dabur, Marico, Colgate, Palmolive, Procter & Gamble, etc. is 46 only. And also, if I consider the best case scenario of 100 PE, then from that perspective, the price of one share should be at around 83 rupees per share. So from that perspective, it is potentially 4 times overvalued. But also please be aware that being overvalued at the time of IPO may be a good thing or bad thing. It all depends on how market is going to react when the stock gets listed. Now comes the last section of this video, which is extremely important. Mamaearth, in my view, is able to command premium pricing from their customers, and we can see that trend from their competition analysis, what they presented in page number 133 of their RHP. Have a look at this and you will see that their revenues are growing at a much higher rate than any other competitors, simply because they're spending a lot of money on advertisement. But the beauty of Mamaearth's pricing is that their gross profit margins are extremely high as compared to competitors. What gross profit simply means is that if Mamaearth is selling, let us say, a shampoo bottle for 100 rupees, they are only paying 30 rupees, roughly 30 rupees to manufacture that bottle of shampoo, because of their gross margin being around 70%. And if you look at other companies, gross margins there are very, very low. It is not because their cost of manufacturing is less. It is mainly because they are able to command high premium on the prices of the product because of the brand of Mamaearth. And if they they continue to do that, the company is going to enjoy premium pricing in the market, and therefore their gross profit margins are going to be higher than the competition. But their biggest problem comes in their EBITDA margins. So have a look at my screen and you will see that their EBITDA margins are extremely low, 6% here, or sometimes making losses. This is where all the other expenses gets added. For example, selling expenses, distribution expenses, marketing expenses, employee expenses, and so on. And if I show you the breakup of their expenses, what you will see in their P&L account is their other expenses are much higher than their purchase of the product itself. So for example, quarter ended June 2023, 256 crores is what they spent for the other expenses versus only 161 crores for the purchase of goods itself. And if we look at the breakup of this 256 crore, you will see that advertisement expense is extremely high, which is fine, because when a tech startup is building their brand, they have to spend a lot of money on advertisement. But the point is that could they now leverage on their brand that has already been built, and can they reduce these advertisement expenses going forward in the upcoming quarters, giving them much better EBITDA margin, and that is where the share prices will be driven by. Now with this analysis, let me know in the comments whether in your opinion, based on this analysis and your own research, is it going to be a hit IPO or is it going to be a shit IPO? Let me know in the comments what do you think, and more importantly, do you think this is high valuation, low valuation? Will you be applying for this IPO or not? Let me know in the comments. Also, I would request you to watch this video now. If you want to understand Jio Financial's business model, this video will clarify a lot of your doubts around Jio Financials. Lastly, you can consider subscribing to my YouTube member community if you want to get exclusive in-depth analysis on various assets such as stocks, mutual funds, IPOs, etc. With that, I will see you in my next video. Until then, keep rocking.